Welcome back to this session number 14. Up to now, you have discussed how we can prepare profit and loss on balance sheet in first year of operations, and then we shall also discuss in the second period of operations. We have taken the period as 3 months for our understanding purposes. Generally, it has happened for 12 months. Now, we shall now discuss about or bring in the concept something called notes. Why notes are required, and we shall also want to see the actually when there is a printed balance sheet and P&L is there, how the notes will look like. So let us start the discussion. Now, let us look at meaning of P&L and balance sheet for 2 years. So first period, we have done this profit and loss from April to June. This was the first period of the profit and loss and then balance sheet. Now, when you do the second period, the first period profit and loss is closed. So for the second period from July to September, a new P&L would be starting. But the balance sheet will start from the closing balance of this period would be the opening balance. So balance sheet will continue. So balance sheet is continuing. So try to understand very important point in that case. The balance sheet is a continuous figure. So balance sheet captures the since inception of the entity till that date, what is the net balance of asset and liabilities. So we may be interested to know more detail about the balance sheet asset and liabilities. What is the age of the assets, to for what period the asset is there. So we need to know more detail about it. That is why if we need to know more detail about it, so we need to get certain more views of asset and liabilities. Since this cannot be captured it here, so we use something called notes. So what is the notes? Notes will talk about what is the detail of plant and machinery, when it was purchased, that is what is the beginning balance, then during the year what is the addition, and what is the closing balance. So if you look at it in this case, let us try to explain it. Now this is the first balance sheet, this is the second balance sheet. If you look at it, WIP has been decreased. So originally it was 12 and it is decreased. So since it is decreased, as we know, decrease of WIP will appear in the P&L as the expenses. So that's why it is 4. In the case of the finished good, it is 9 and it is 12. Finished goods has increased. Since finished goods has increased, so it would be reduction, correct? So it would be the increase in finished goods. So here what we'll do, I will change this. It will not be the debit entry. It would be the, in the case of the finished goods, it would be taken as a credit entry. Why credit entry? Because this is the cost would be reduced. So credit, that is the increase in finished goods. So by that amount, this cost would be reduced. Clear? So now let us look at it. Why notes are required? I may want to know more detail about it. Since I need to know more detail about the balance sheet and P&L figure, so I cannot present it in the top page. So I need to get more details. That's why we put it notes. So let us look at it. Now, which year the end, then we can also compare between the 2 years, which year the entity is performed better. Do we need to know more about each item? Say, for example, this receivable, very important point. Does this receivable also consist of some sales which has happened previous period, or it is only for this period? Now, since balance sheet is starting from since inception, so it may be possible that some of these receivable may not have realized here. So that is why these receivables, we need a backup. That's why we need to know the age-wise receivable. Because since this receivable is a combined figure since inception till date, what is the age of the receivable? How old is the receivable? We need to know. So that's why we need to know more detail about it. So why notes is required? When we require more detail about it, That's why notes are required. Let us look at it. Now suppose this is a capital. Now I need to know more about capital. Since it's a front page, I cannot get detail. So this would be put in the form of a note. Let us look at it. So the notes will come for each item of profit and loss and balance sheet for giving details information of it. Now capital, there are two types, equity and preference shares. Generally capital are of two types, equity and preference shares. So in the notes, it will be mentioned how much is the equity and how much is the normal ordinary capital and how much is the preference capital. So notes will give you detail of each item of P&L and balance sheet. Let us look at an actual example. This is the Reliance. So in the case of the Reliance, the equity part, if you look at it, the equity it is showing notes would be the equity share capital notes 13 and other equity 14. So equity consisting of two parts, equity share capital and other equity. Since in the notes, so what will happen? Now let us look at what is the notes talks about. Now the notes detail would be given like this. So it is a share capital, authorized share capital, issued, subscribed and paid up is this. So what does it say? It shows that the detail of equity has been presented under the notes 13. Now you should get clarity on why notes are required and how we can use the notes for our analysis purposes. Now, next is that inventory. So this is, we have taken again screenshot of the Reliance balance sheet. So inventory, this is the notes. Let us look at what is the notes will contain. So if we go to the notes, we find out that this is the breakup. So in this case, the inventory breakup has been put raw material, WIP, finished goods, spares, etc. So this is the way the notes will give much better picture of each item. So what we have learned in this session, that in the case of the P&L and balance sheet, we may need to know more about it. For example, in balance sheet, receivable also contains from previous period receivables, what is the age of the receivable. In the case of the P&L, we want to see the operating expenses, what is the composition of operating expenses. Since it cannot be presented in the top page, so we need a breakup in a separate format. So this separate format we capture in the form of a notes. Thank you so much for viewing this session.